The last time this many signals lined up at the same time, Bitcoin was trading under $20,000. Right now on the weekly chart, on the monthly chart, and across sentiment indicators, we are seeing a combination that has only appeared at major cycle bottoms. And if you're not paying attention to what's forming right now, you might look back at this moment the same way people look back at November 2022. I'm going to walk you through 7 signals one by one, and then at the end I'm going to show you exactly what the ideal buying scenario looks like when they all come together. The final piece is the one you really don't want to miss. Let's start with the weekly RSI. RSI measures momentum on a scale from 0 to 100. Below 30 means oversold, meaning sellers are exhausted. What matters here is how rare this signal actually is on the weekly time frame. Bitcoin's weekly RSI almost never drops below 30. On the daily chart, sure, you can see it every few weeks, but the weekly, you can count the occurrences on one hand, and every single time it has happened, it marked a generational buying zone. Let's go through them. Mid-2022, right in the aftermath of Luna collapse and the Three Arrows capital blow-up, Bitcoin had crashed from nearly 50,000 at the start of the year. The entire market was in freefall, and the weekly RSI dropped into oversold territory. That reading came during one of the most brutal capitulation events in crypto history, and what followed? Price eventually bottomed around 15,500 in November and then launched into a rally that took Bitcoin all the way past 125,000 over the next 3 years. If you were paying attention when the weekly RSI went oversold, you were front row to the start of the next cycle. Go back to December 2018. The bear market had been grinding for an entire year. Bitcoin had fallen from 20,000 all the way down to around 3,200. Sentiment was destroyed. Nobody wanted to touch crypto. The weekly RSI hit oversold, and that was the bottom. The next bull run had begun. Now, here is an important nuance. During the COVID crash in March 2020, Bitcoin dropped over 50% in a matter of days. It was absolute carnage, but the weekly RSI actually did not drop below 30. The crash and the recovery happened so fast that the weekly candle absorbed both the panic and the bounce. So the weekly RSI got low, but it didn't technically reach oversold. That's how rare this signal truly is. Even a 50% crash in a week wasn't enough to trigger it. The pattern is remarkably consistent. Every time the weekly RSI has actually crossed below 30, it has marked a generational buying zone. And right now, as we speak, the weekly RSI is oversold again. In fact, it's at one of the lowest readings in Bitcoin's entire history. That alone should have your full attention, but it's just the first signal. Now let's stay on the weekly chart and add another layer, the 200-week SMA and the 300-week SMA. These are long-term simple moving averages that act like gravity for price. During bull markets, Bitcoin flies far above them. During bear markets, it crashes back down toward them. And when price actually reaches these levels, historically, that's the bottom. The 200-week SMA has been the most reliable macro support level in Bitcoin's history. In the 2018 bear market bottom, price wicked directly into the 200-week SMA before reversing. That was the floor. Buyers stepped in right at that moving average, and price never looked back for the rest of the cycle. March 2020 was even more dramatic. The COVID crash was so violent that Bitcoin didn't just tag the 200-week SMA. It sliced right through it and briefly touched the 300-week SMA. That was the absolute panic bottom. The moment price touched the 300 SMA, it reversed with one of the most explosive recoveries in Bitcoin's history. From that 300 SMA touch to the cycle high, Bitcoin gained over 15 times in value. The 2022 cycle bottom. Once again, price found its floor right around the 200-week SMA zone. It spent a few weeks chopping around that level, shaking out the last remaining sellers, and then launched into the next bull cycle. The pattern is clear and it's consistent across multiple cycles. The 200-week SMA is where smart money accumulates. The 300-week SMA is a gift that the market almost never gives, and when it does, the returns from that level are staggering. Right now, the 200-week SMA was nearly tagged. Price came extremely close but hasn't quite reached it, and the 300-week SMA is sitting below, waiting. Both of these levels need to be on your radar, because if price drops just a little further, it enters the zone that has marked the bottom of every single major cycle in Bitcoin's existence. Now, here is the third signal, and honestly, this one might be the most technically powerful of them all. The weekly MACD is forming a regular bullish divergence. A bullish divergence means price is making a lower low, but the MACD is making a higher low. Sellers are losing momentum even as price drops. Let me show you what happened every time this signal has appeared on Bitcoin's weekly chart. And I mean every time, because the track record is essentially perfect. The 2014 and 15 bear market bottom. Bitcoin had been bleeding for over a year. Price dropped from around $1,100 all the way down to about $170. Brutal, but as price made that final push to new lows, the weekly MACD didn't follow. It made a higher low, a textbook regular bullish divergence. That divergence marked the exact bottom, and what followed was the legendary bull run to $20,000. The 2018 and 19 transition. After the ICO bubble burst and Bitcoin fell from 20,000 to 3,200, the weekly MACD formed a clear bullish divergence at the lows. Price stabilized, the divergence resolved to the upside, and Bitcoin rallied all the way to 14,000 within 6 months. Post-COVID crash, same setup. The weekly MACD diverged bullishly from price, signaling that the selling pressure was fading even though the chart looked terrifying. That signal preceded the entire 2020 and 2021 bull run, from under 4,000 to 69,000. And now, the same pattern is forming again. Price is pushing lower, but the weekly MACD is making a higher low. The momentum behind this sell-off is weakening. The sellers are running out of fuel. This divergence isn't just a random indicator blip. In the context of Bitcoin's history, it has a perfect track record of calling major bottoms. By the way, if you're watching this and thinking about positioning for what could be a massive move, check out Bitunix Exchange. They're offering a 20% deposit bonus. You put in $1,000, you get $20 for free. No VPN required, no KYC. Just sign up using the second link in the description. Now, let's zoom all the way out to the monthly chart. The MACD on the monthly time frame is showing something fascinating, a potential hidden bullish divergence. Unlike a regular divergence, a hidden bullish divergence means price makes a higher low while the MACD makes a lower low. It signals the bigger trend is still intact, and this pullback is just a shakeout within it. Now, I want to be very clear. This is not confirmed yet. It's just forming. The structure is there, but it needs more time to play out. However, if it does confirm, the implications are massive. It would be telling us that the macro bull trend that started in 2022 cycle bottom is still alive. That everything we've experienced in this correction, all the fear, all the pain, all the bear signals, is just noise within a larger bullish structure. A hidden bullish divergence on the monthly chart would mean the next major move is up and not down. And given that this is the monthly time frame, we are not talking about a short-term bounce. We are talking about a move that could define the next several months to a year of price action. And while we are on the monthly MACD, I need to point out that genuinely surprised me. Look at the histogram. The monthly MACD histogram has never been this deep in Bitcoin's entire history. Never. Not during the 2014 crash, not during the 2018 bear market, not during COVID, not during the FTX collapse. The histogram measures the gap between the MACD line and the signal line, and right now the gap is wider than it has ever been on the monthly chart. What does a historically extreme histogram mean? It means monthly momentum is stretched to an extreme that has no precedent. And here is the thing about extremes. They do not last. They always mean revert. Always. And when a monthly MACD histogram that has never been this extended finally starts to revert, the snapback in price tends to be violent and fast. We saw it after every previous extreme. The histogram contracts, the MACD line begins to converge, and price rips higher. This time, the histogram is even more stretched, which simply suggests that the eventual reversal could be even more powerful. Now, let's step away from the charts for a moment and talk about sentiment. The Crypto Fear and Greed Index is deep in extreme fear territory. This index aggregates volatility, momentum, social media sentiment, surveys, and Bitcoin dominance into a single number from 0 to 100. Below 20 is extreme fear, and if Bitcoin's history has taught us anything, extreme fear is where fortunes are made. Think about what extreme fear actually represents. It means the majority of market participants are terrified. They are selling or they've already sold. Social media is flooded with bearish takes. The mood is dark. Hope is gone, and that is precisely the environment where bottoms form. Not when everyone is bullish and excited. Not when people are posting rocket emojis and picking out Lamborghinis. It's when the fear is at its peak. When it feels like the worst possible time to buy. That historically turns out to be the best time. Go back and look at every extreme fear reading on this index. Time after time, it coincided with significant bottoms, or at the very least, excellent buying opportunities on a medium-term horizon. The crowd is an incredibly reliable contrarian indicator. When they are greedy, be cautious. When they are fearful, pay very close attention. So now, let me tie all of this together, because this is the part I told you about at the beginning. The part that really matters. Each of these signals on its own is significant, but signals don't exist in isolation. The real power comes from confluence. When multiple independent signals all point in the same direction at the same time, that's when the probability of a major move goes through the roof. So here is exactly what the ideal buying scenario looks like. First, you want the weekly RSI to form a bullish divergence. Right now, it is oversold, which is already a rare and historically significant event, but oversold alone isn't the strongest possible signal. What would make it much more powerful is if price makes another low while the RSI holds at a higher level. That creates a divergence. That's the difference between sellers are tired and sellers are completely gone. We are watching for that second leg to form. Second, you want Bitcoin to actually tag the 200-week SMA. It came extremely close, but close isn't a tag. A clean touch of the 200 SMA, or even better, a wick down to the 300 SMA would put price at the exact level that has marked the absolute floor of every major bear cycle. That's not opinion. That is historically repeating with remarkable precision across 4 separate cycles. That level is where long-term holders and institutions step in with real size. Third, you want the fear and greed index to drop even deeper into extreme fear. It's already there, which is already significant, but if it pushes lower into single digits, that represents maximum capitulation, the final flush, the moment where the last weak hands throw in the towel and sell at the worst possible time. That level of fear is what creates the fuel for the next explosive rally, because once everyone who wanted to sell has sold, the only direction left is up. And fourth, the monthly MACD. You want to see it start curving upward. The histogram needs to begin contracting. The MACD line needs to start approaching the signal line from below. Now here's the important caveat. This will be a late signal. The monthly time frame is slow by nature. It takes weeks of price action to even register a visible change. By the time the monthly MACD visibly turns, price will likely have already bounced significantly off the bottom. So don't use this as your entry trigger. Think of it as confirmation. When the monthly MACD turns up after everything else has aligned, that's your signal that the bottom is in. The cycle has turned and the next major move is underway. When all 4 of these conditions align, weekly RSI divergence, price at the 200 or 300 SMA, deep extreme fear sentiment, and the monthly MACD beginning to turn, you have a setup that has appeared only at the most significant bottoms in Bitcoin's entire history. Not corrections, not dips, the actual generational cycle bottoms. The confluence of signals is what separates a maybe this is the bottom from a this is almost certainly the bottom. If this analysis helped you see the bigger picture, hit like and subscribe so you don't miss the follow-up when these levels get tested. And if you want to get positioned, sign up on Bitunix with the second link in the description. You will get a 20% deposit bonus, no KYC and no VPN. Thank you for watching and see you next time.